The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 18th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, if you can't dial in, well, just let your fingers do the walking. Do that by sending me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on magical and magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 162 points, 24,814 is the number. S&P's up 17, 2693. NASDAQ 100 up 54 points, 0.8%, 6520 is the print. You've got the semis up 2% or 26 points. NASDAQ Composite was above 7,000 a few moments ago. It's trading at 69.99.52 as we speak. Trannies are up 1% or 107 points. 10,500 is the print. Gold's up 8.80. Silver up 13 pennies. Light sweet crude back 37 cents. Leading the charge here to the upside. It is Bitcoin Investment Trust up $541 or 20%. Long Financial Corp up $66 or 300%. Wow, that's interesting. Priceline Group up $24. Amazon's up 10. To the upside, to the downside, WellCare Health off 727. You got Euronet World down $6. Humana off 5. What's the XLV doing? Where's that? That's up a quarter out there. So that's what's going on. Of course, I want to know what you want to look at. We did have a couple of requests, so let's go take a look at those first. The first coming in from Tom. Let me make sure I get the request here correct. This was a write-in. So Tom says, I'm long UGAZ, so that would be long the natural gas futures contracts in essence. He's long at 571. I'm looking to see what your thoughts are for this week's natural gas numbers for Thursday. It was very cold in northeast last week. So what I can do for you, Tom, is really just take a look at the equity futures contract and see what it is doing, just to help guide you along with your trade in that triple long natural gas contract. Now the UGAZ, I believe, holds about 50% of its holdings are in the January contract. That's what we're going to go take a look at. About 50% is in the February contract. The first thing that we'll start with here, I know you're a short-term trader, but we'll put up the January contract right now. And what I want to show you, so we know that this has been a nice downtrend. And in fact, today you've got, at the moment, you've got a nice little bullish reversal candle. The problem is that what it hasn't done, this is what you need to see it do. I'm not suggesting, it doesn't have to do it necessarily by day's end, but you should go ahead and put this into things to think about, things to consider. And what we've seen so far today is a counter trend rally that took price right where it should have, which is Stevie's red line. Now that's priced at 278. Did it hit it right to the penny? Off by maybe a tick or two out there. But that is your counter trend rally, a close above Stevie's red line on the January contract of 278. Well, then that would be muy bueno. That would say, okay, you may have caught a bottom, and then we'd have to take a look at, well, where could price go? So what we want to then do is switch over and take a look at our TAS profiles. We can look at this on multiple time frames, which is what we will do. Here's the 60-minute, 240 minutes. So we're going for an hour to 4 hours, to the daily, to the weekly out here. Weekly basically useless to us. Daily, I talked about how in the daily price had run into basically resistance out there at my red line. When we take a look at the January contract out here, 281 is a number that you want to see price get above. That is the bottom of a daily profile out here. Now, what the orange bar is suggesting to you and I is that a new profile from a daily standpoint is trying to form. I don't know what this is going to look like at the end of the day, but that's the current message. Right now we have to go with what we know. And what we know is until price closes over 281, and that's going to be significant resistance, all you've seen thus far is a counter trend move inside the January contract. If we go take a look at February, let's go ahead and get those numbers up. Oh, I do have February. So this is February's numbers. Let me go ahead. I apologize. So let me go ahead and put the January contract out here. So, Tom, that's good because that's going to be helpful for you in assessing your trade in UGAZ. So 281, and that's a significant level of resistance. You'll notice out here that there is only 2 bars from its TAS profiles. What that's telling you is that the point of control is also at the bottom of that box, 281. So if price can get above that, boy, that would tell you that, okay, then price could head up into the 298 level. That's using the daily. And if it can't, just been a counter trend move so far. If we go take a look at the numbers inside the natural gas contract for January, the number is 279. So in this case here, it also happens to be the bottom of its box. So you've got the bottom of the box, the center of the box at the same price point, 279. That's what I really meant to say out there. You sort of knew what I was trying to say. Now I just said it. And that's a price point that you need to see natural gas get above in order for your UGAZ trade to really take off. And by taking off, you'd be looking for about 314 in the January contract for nat gas. So best of luck with that trade. Those are the numbers. That's the best that I can do for you. Let's go take a look at FCX for Dano inside the den. Dano is long FCX from 1605. It's trading, looks like at 1740 right now. So nice trade here. Let's go take a look at our 3 different time frame profiles: daily, weekly, and monthly FCX. Now, you may recall that when you trade FCX, you are also trading the Australian dollar. You might say, what do you mean by that, Steve-O? Well, looks, if we just switch this over right now, we're going to see we should see a similar price movement inside the Australian dollar. I'm going to look at the futures contract as we are inside of FCX. Look at that. You've got a nice move to the upside. And here is the dominant currency, obviously, affecting Freeport-McMoRan is the Australian dollar. So, Dano, to be long out here, you certainly like to see what you're seeing right now, which is price traded above the top of that box, 76.60 in the futures contract. Steve Rhodes with TFNN. We'll finish taking a look at FCX when we get back from this break. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So before we went to that break, we were looking at FCX for Dano inside the Tiger's Den. And I had mentioned when you're trading FCX, you're also really trading the Australian dollar. Now, this chart here that you and I are looking at, it's a chart that has a very cool tool. It's a correlation tool that allows us to take a look at the either positive or negative correlation between two instruments. Now, FCX is the chart pattern that is with the candlesticks on the top portion, and the bottom portion are red bars. And basically, a red bar above the zero line. If you look on the right-hand side of the screen, you'll see 0, 0. Bars either above zero or below zero. Above zero tells us there's a positive correlation. Now, I take a look at this using a 10-day period. So we're not looking at day to day, we're looking at a 10-day period. And for the most part, we can conclude that, and this is a directional correlation, by the way, that there is a very positive bias between these two instruments. That's why I say, what you hate to do is see the Australian dollar going one way and FCX going the other way, or vice versa. I really believe it's the currency that is the real key, the kingpin, to trading FCX. But let's go back and take a look at our three different time frames out here. Danny's in at 1605. This trading at 1741. So kudos to you. Kudos to Fletch as well. You guys caught this thing at a nice price. I'm not sure where Fletch is in. I think it's even lower than that. If we take a look at just simply based upon market profile numbers, this is above the daily, this is above the weekly out here, so that looks good, and it is getting above the monthly. Now, we're coming to the end of the month here. It's only the 19th? Yeah, 18th? What is today? The 18th out here, so we still have a few more trading sessions. To be exact, we have what? We've got 4 left this week, 4 left next week, so 8 more trading sessions. And right now, what you'd really like to see, not just a close above 1628, but certainly above the swing point. Let's see which one is it really. Is it the month of January at 1706? Yeah, so January had volume of 625 million shares, and you're going to be way light this month. If this were 1460, hey, congrats there, Fletch. If we take a look at this, look, this can still form an A to B equals CD to the upside. Your A point down here, why isn't this thing working? There we go. There's our A point. Here's our B point. So a nice A to B equals CD to the upside could be forming. That would give you a price projection in the 2460 level. Again, this is a monthly chart that we're taking a look at. So monthly is trying to cross that B point, is across it, quite frankly, but on light volume. Does that mean that it's going to reject that area? No, but you should be on your toes out here. Of course, I don't know what your time frame is for trading. In at 1460, could really be a long time. Take a look at a longer-term move out here. Certainly nice wide-ranging bar last week. Now, that weekly chart had volume of 127 million as it was crossing through 219. So on the weekly chart, even though you're above the swing point, you're on with light volume out there. Let me try to figure out on the daily chart when you pass that swing point. Can we get a volume swing point pass? 56 million is what we're looking at, January 24th. And last week, what were you coming into it with? 36 million. Now, you're not going to get any type of volume confirmation, Dano or Fletch. Does that mean you skedaddle? No. Let me see. Is there anything else we can figure out with regard to what this is trying to do? Nothing on the daily, so to speak. Well, if we take a look at wave counts, where are we on the wave count issue? Only in C out here. Let's look at this on a weekly time frame. I guess the best information, now I don't see anything really. You can see where the bottom came in, had that nice little price relative strength divergent pattern. Okay, so there was your first seventh wave move. You're now over that seventh wave move as we speak, so that's a positive. Just be careful. Again, I don't know your time frame out here. About the only thing we can conclude at this stage is you're up above prior swing points with light volume. Pull back on this could easily be to 1538 on a weekly time frame chart. On the daily time frame chart, that pullback could take it to 1559. So those would be the numbers that I would be looking at. But I must say kudos to both of you guys for that trade in Freeport, Mac Moran. Now, the Dow's up 145. Let's go take a look at what's going on inside the markets. Let's look at this first. Long term, you already know our position here long term, right? And that is at the Dow, the S&P, all the markets are going to be much, 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 much higher. I'm not just talking about going into the end of the year. Now I'm talking about 2018. So we're going to shift from 2017 to 2018. And I'll share with you all those reasons why. Tom's not here at 3 o'clock, and so I normally do a 10-minute deal with Tom. I'll do that in the open and show you where price is headed to and the reasons why. At least something for you to think about. If we go take a look at what's going on the 30-minute chart here inside the NQ, what we can see is price is rising, doing less relative energy as we speak right now. And I don't know what the candle is that's going to form here in the next 7 minutes. If it was done right now, it would be a reversal candle. Now I would say, okay, price could go ahead and retrace back into somewhere into the bar that created at 10 o'clock this morning, whether it's the top of the bar or the bottom of the bar. That's one possibility. Of course, what you and I would really do is we'd go take a look at the NQ, take a look at its TAS profiles, and try to better figure out where is it that price might be headed to. So we take a look at the 30-minute chart. We're going to see so far that retracement on the 30-minute chart, no big deal. It's up at the top of its box, top of the box being 65.34. If it gets inside there, it's a bearish box. So you'd take a look at price moving back to 65.28 to 65.20. But you've got to close, or it's got to close below 65.34 in order for that to happen out here. Otherwise, the NQ looks pretty good, looks pretty healthy out here. So 65.20 on any kind of pullback for whatever reason to 65.10 would be my number inside of the NQ. If we go take a look at the ES mini out here, we'll do this again on the short-term time frame. That's the 30-minute chart out here. We can see price also was moving higher, doing less relative energy. We did not get a bullish reversal signal until we came on the air at 1 o'clock. You're getting some follow-through to the downside. So let's do the same thing to take a look at potential price targets. Does that mean the top is in? No, it doesn't. Could be in for the day. I don't know about that. And so let me make sure that I rephrase that properly. With regard to the ES Mini, its level of support is down at 26.91. So that's another 4 points down to the downside. Any close below that, you're looking at 26.88 out there. And it's only the 30-minute chart that's going to give us any kind of set of profiles. The 2-hour chart out here looks like it's trying to form a brand new set of profiles. But that won't take place until Well, maybe about 2 o'clock. It's when we could first see those profiles appear, about 2:01 in the afternoon. So that's what's going on there. On the short-term time frame for the Dow, let's just take a look at it. What do we see here? Excuse me. Nada. Don't see any kind of pattern to speak of. That doesn't mean that it can't pull back. It just means that now we've got to go to market profiles to look for any types of support and or resistance inside the Dow. Again, we're looking at short term. Now, short term out here, the Dow is saying, hey, hold on a minute, Steve-O. Maybe I do want to head lower because price right now is trading below the 30-minute bottom of its box at 24,817. You're at 24,806. That's 11 points. It's also below the 24,814 on the 60-minute time frame out here. Something to think about. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So John in Sarasota wanted us to take a look at HSBC for him. That's a chart that you see on our screen out here. And when you take a look at this chart, probably one thing that's going to stick out at you is you're going to see scatterbrain. That's the word that comes to my mind. You'll see just simply gaps everywhere. Much like Dano and I took a look at FCX and the Australian dollar, HSBC, which is headquartered in the UK. So really, you should be looking at the FTSE, John, to really try to understand and make heads or tails of what HSBC is doing. The bottom panel is the pound out here, pound futures contract. So we can see that again, that currency not as a very positive correlation. I think a little bit more positive correlated with regard to FCX. But here, when you see all these gaps, how the heck they have no meaning. We take a look at this in U.S. dollars is my point. So you were talking about long-term out here. So how can I provide you with the best information? Well, the best information was go to the exchange where this is trading in that currency and really take a look at patterns there. But if we look at the U.S. HSBC traded over here, and we take a look at the monthly chart, since you want a longer-term time frame, you're going to see this blue line out here that I've got. Move it up and down. You can see that there's a resistance level towards this $60 area. So you're at 50.73. Maybe it's 58. I'll tell you exactly what it is. I can't tell you. Unless I do this, I think. No, why isn't it doing that? Oh, man. Let me see. Try one more time. 58.71 is probably the level I would look at as resistance. I don't know if you're in this or not in this. If you're looking to get in this, see how the price oscillated on the bottom panel here over the past 2 weeks. It's just now above zero. What you should see longer term, it's a monthly chart. So when I say longer term, it's not going to happen tomorrow, that's for sure. But we should start to see price and Stevie's red line catch up to each other. And if we can see price and the red line catch up to each other, and then HSBC bounces off of it like a trampoline, well, then that's telling us that the tone here has changed. Still has that resistance in that 58.70 area out here. And at this stage, all we can really call it is a consolidation move. Right, a consolidation move in essence that takes us back into about the time frame of when is this? 2008. So with regard to financial stocks out here, there's certainly many that are much better out here. But clear that 58.62 level, and things could be looking up. When I say looking up, if we just take a look at the long-term A to B equals CD pattern out here, that gives you a price projection of 64.96, maybe 74.03 out there. So happy holidays to you as well. And thanks for listening. Thanks for writing, as always. We had another request that came inside the Tiger's Den. Let me see. Where is it? Where was it? Tarpon 2 wanted to take a look at MGTI. So let's go back to our 3 time frame chart out here, MGTI. Let's go see what this is. This is Management Capital Investments. And here, if we take a look at the oh, geez, Louise. Good thing we went back pretty far on this. Hey, do you know this about this? Is this a reverse split by any chance, or what? Any info on this that you might have out there? When I say you, who was it that put in the request? Who put in the request? Who put in the request out here? I know I just said it a moment ago, but I was multitasking, and now I can't find it. Tarpon 2. Okay, so I just had the monthly chart out here. Yeah, this is some type of reverse split out here, because as we pull this, so this must be a shell. I'm going to guess that they bought or something like that. Just means that the information on this chart is basically useless. If I take it back just to August of 1995, it says there were shares selling for $32,000. And if there were, we would have heard about it. So now out here, how are we going to provide you with any kind of reliable information? Let's get rid of the monthly chart. When I say get rid of it, I mean it in a kind sense out here. Let's just get it off of our plate. Now, not a liquid stock. When I say not a liquid stock, 400,000, 200,000, 150,000 shares out here. Now, as of late, we've seen some signs of strength. There was one out here on the trading day of August 31st, 7.6 million shares. Now, price is trading above that, so that's a beautiful thing. And it's today that it's trading above it. So that high's been taken out. What looks like with volume, we're at 6.7 million shares versus the 7.6. Just needs 1 million more in order to do the million-mile march. The million-mile march would take you to an A to B equals CD price projection. That price projection is, if I can ever figure this out here, nimble fingers. Let's see here. Ah, I did it again. It's because that candle is so small. or my timing is off. There's our A point. We talked about our B point, C point back here on November 22nd. Wow, you've hit the 1-to-1. 534 was the target. Now you're coming into that level with a wide-ranging bar. What that suggests to me is that prices don't end on wide-ranging bars, and that this ought to be making its way. This is management capital investment, should make its way up to about the 637 level. Let me see here, MGTI. Let's put it in on this system as well. Let's not take a look at that monthly. That's just going to be a hodgepodge of nothingness. Let's take a look at the daily chart, see if there's anything out here. You know, at this stage here, you've got an A to B equals CD to the upside. Looks like it wants to continue to trade higher. Support on this is about 358 is what I would have to take a look at out here. Profile-wise, it's 425. Those are your support levels, 425 to 330. But I would, I don't know where you're in on this trade. I'd stick with it or take some profits, depending on where you're at out here. But this does look like it wants to run higher. I just don't know what this equity is and all this lack of trading and what they've done. They're definitely pumping it. The question is, are they dumping it? They're not at this stage of the game. Speaking of dumping out here, we don't see a lot of dumping going on inside of the Dow, the S&P, the NDX 100. We haven't talked about gold. Let's go take a look at gold. Trading up 740, 750 out here. The problem inside of gold on a short-term basis as we speak is the 30-minute time frame chart. Because on the 30-minute time frame chart, coming from the, let's get our crosshair out here, coming from 2100 hours last night out here at about the 1250 level, what we can see is that you got to wave number 7. I don't know how this works, other than this is a Motown thing. This is a Stevie Wonder thing when it gets up to that 7th wave move or singing in the key of G. And at this stage, how does that work? That's the short-term high that we have. So gold is pulling back. Should be, as expected, one of those tools that you and I like to use. That means we've got to flip over and really take a look at our TAS market profile. So let's go do that. Let's go put up Stevie's synthetic contract, because that's going to provide us with the best set of profile information. We've got 60, we've got 240. Let's put that 30 up on the screen out here. On the 30-minute profile, you can see we're trading with inside that box as well. So resistance, not only wave number 7 singing in that key of G, 1267 is the number. Support, which should be good support, would be down at the 1261 area. Now 1267, 1266, 10, those are key areas of resistance. In order for gold to really get its legs, to get its mojo back, it needs to close above those levels. Am I saying that it won't? No, I'm not. Because on the daily time frame out here, what you've got, if this is just pulling back to support, which could be 1261, as long as it stays above 1259.40, that's the number on the daily time frame, gold could be forming a bottom. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Dow's up 138, S&P 16, NASDAQ 100 up 51 points out here. Let's go take a look at the advanced decline oscillator readings. They're all above zero. The NASDAQ composite, this is day number one, potentially above zero. That's a bullish indication, unless tomorrow it were to close below zero. Then I would say that sellers, even though prices have been moving higher and we want to watch the NASDAQ composite, the meaning, the basic meaning out here, when price is below zero, it says sellers are in control. When it's above zero, it says that buyers are in control. You'll see that green and red line in panel number 2 on my chart. I don't know why it's not working for the Dow. You'll see the above zero, below zero is when that line turns red and green. Green is above, red is below out here. But as we take a look at the New York Stock Exchange and try to get a feel, so we know we're in a favorable seasonal cycle. We know that the next 4 trading sessions have a 67% chance of closing higher out here. 67% chance. Now that's based on coming off of the bottom in March of 2009 out here. Now what we're really watching for is whether or not, and the advanced decline line's at new all-time highs, as is the volume line, as is price inside the New York Stock Exchange. So everything is in sync out there, so to speak. And the question is, this really doesn't get towards what we'll call a critical level until it gets up towards 150 or above 150. And that's the yellow line at the top of my screen here. It's 78.33 out here right now. So to a certain extent, there's no reason that I can see inside the market for price not to, or for the advanced decline oscillator reading to try to get up to that level. That's what will really release a bunch of information to us. So you've got an A to B equals CD to the upside inside the New York Stock Exchange. That would look like, well, if I had the tool turned on, I could tell you what that would look like. That's interesting. Why isn't it there? Well, it will be there momentarily. There we go. So the A to B equals CD pattern inside the NYSE looks like this. And you can see it's got much, much higher to go just to get to the 1-to-1 level, which would be 12,951. The reality is that should not be where price is headed to on the A to B equals CD inside the NYSE. 13,162 should be the minimum objective. Of course, certainly the minimum objective is 12,951, the 1-to-1. But the way that it's trading, it should be able to make it higher. If that advanced decline oscillator can get above plus 150, that would be the signal to both you and I and everybody else that, in fact, price is going to extend beyond 12,951. Doesn't mean there can't be any pullbacks. This is trying to assist us with the longer term view, because, you know, as we are trading with the favorable seasonal cycle, as we start to get into the January, February time frame, things can be dicey. Doesn't mean they will. We'll look for signals to assist us with that. And even if we do get that signal, you want to make sure that you're getting that gunpowder ready to continue to ride this bull, because these markets will continue to move higher. And they will continue to move much, much higher. The NYSE right here is telling us that it wants to move 13,162 minus 12,791. What is that? That's about 250, 350, 400, another 400, 450 at least. And it can move much higher than that. But we'll be watching to see if, in fact, that AD oscillator can get up into the plus 150 section out here. VIX index, hey, I know it's trading higher intraday. Doesn't mean a thing, because it doesn't have that swing. And that swing would be it needs to close above the 50-day exponential moving average. That level's at 1041. So nowhere near there. So what else are we going to look at here for the next, I don't know, 8 minutes or so? 15 minutes left in the show out here. I don't know. Although we do have bonds trading lower. Now that is really interesting out here. What is going on with the 30-year Treasury? If we take a look at the yen futures contract out here, we can see it's tested, it's rejected. I've got to change this. This has got to have rolled over, even though it looks like December's still active inside the yen. It has tested and rejected Stevie's red line out here, so that's still bullish. Bullish for gold, bullish for the 30-year Treasury. But you look at the 30-year Treasury, and it's saying something else out here. Testing, trading below Stevie's red line. Now, that just says that, okay, there could be more retracement. You can see the bottom here inside the 30-year. You can see how it made a high. When I mean high, I'm referring back to the trading session of September 8th with a 7th wave move, letter G. This is a Motown chart. Makes a low out here in the trading session of October 27th. Does that in the letter G, or wave number 7 out here. And so maybe the third time will be a charm. I don't know. But with more potential retracement, let's go take a look. So if price closes below 153.48, that's on the March contract for the 30-year. Let's go see if we can figure out where price might trade back to. Now, in this case here, we are going to actually, as soon as I can find it, where is it? Here we go. We're going to just look at the profiles for the March time frame. Well, okay, so price should be at support as we speak right now. Why do I say that? Well, I'm looking at the 240-minute time frame out here. In the bottom of that box, 153.07, that is where we are trading at right now. So if price closes below that, then what we're looking at is maybe 152.25 out there. Let's go to John in Philly, because he wants to talk about bonds too. John, thanks for calling. Thanks for holding. How are you today?
Hey, Steve-O, happy holidays to you. I'm doing well. Yourself?
Thank you. Doing well also.
Good. I had to call in because you brought up bonds, and thank you for bringing these. Tell me, I see the daily TAS has bottom of the box down at 152.10, which is down near a prior low.
Yes.
Any reason for you to think this little decline that's just started today gets down there?
If it were to close below the 240 bottom of the box, 153.07, then your next levels are going to be 152.27, 152.10. Though, you know, it has to go in that progression out here. The reason why maybe this is up against support right now would be the mere fact that the yen has not broken down. So, and it's a directional correlation. It's not as good as gold, this correlation, but it's really pretty good. In fact, if we pull it up, let's just see how good it is. Let's not even surmise or guess. Let's go take a look at the 10-minute chart out here just to see what is happening. Now I've got to do this. Sorry about that delay. So we're going to try to answer your question as best as we can. So we're going to pull up the yen chart, 10-minute chart for both yen, gold, and the 30-year. So we can see that bonds are just totally doing their own thing out here. So if they're doing their own thing, we're not going to focus on what the yen is doing. Instead, I think our best tools are taking a look at those profiles. Are you trading this to the downside right now?
I'm short. Yes, I'm short the ZBH posting it at 153.30 this morning, 9:30 or so. Yes.
Okay. And what time frames are you? What's the shortest time frame that you look at for any kind of information?
Oh, hourly chart.
60 minutes. Okay. So I want to just give you at least the 60-minute profile so that you can make any kind of. So the good news there is on the 60-minute time frame, you're below boxes. There is no new profile that's forming just yet out here, and that's the best that I can give you at the moment. Alrighty.
Very good. I'd like to share one thought with you fundamentally after the break.
Absolutely. So stay on through the break. We'll go back to John in Philly. We'll talk about the 30-year Treasury. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. We're on the line with John in Philly. We're taking a look at the 30-year Treasury. And, you know, John, the only thing that I can see out here with regard to this pullback is on a 10-minute basis, you've got price trading back into a swing point area from December 14th at about 10:40 in the morning. So we'll see if that at all has any kind of stalling in price there. At that about that same level, just on a 10-minute chart, looks like a pretty decent breakout with volume on December 13th at 8:30 in the morning. So if it's going to find support, it would be around this level. And if it doesn't find support, then price should trade all the way back in the 152.08 area. So that's what I see on the shorter term time frame. You had some other information that you wanted to share with our listeners out there. So fire away.
Yeah, Steve, thanks for doing that work. I wanted to share a hypothesis, a speculation I've got. Perhaps you could mull it over and respond to it, if not today, sometime in the future here.
Sure.
I see that this bond contract has punched up into the 154, 154.5 multiple times now the past 4 weeks. And any big move in any market always has something driving it. Question is, what is it? My speculation on bonds here has been that the buying support that's been evident the past 6 to 8, 10 weeks is about to give way. What my speculation is that big corporations who had big pension fund liabilities were anticipating tax reform to come with a major decrease in the corporate tax rate, and were piling expenses into this calendar year to minimize taxable income this year so that
Sure.
they'd be able to maximize taxable income next year at a much lower tax rate. And one of the big expenses that they can pad this year with is contributions to their pension funds, which say they're underfunded. And a good many of them are underfunded. So my speculation has been corporate pensions, Ford, IBM, GM, the whole litany, have been buying or have been adding
I
cash.
love the theory, and I apologize we're going off the air, but that is an excellent point. And we'll revisit it tomorrow, okay?
Thanks so much, Steve. I appreciate it.
Okay.
Bye now.
Folks, stay tuned. I don't think David is here, but I'll be back with you at 3 o'clock doing Tom's show. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software.